Once again, for those of you who were here already kind of a minute ago, my name is Erica Blankhardt, Senior Public Affairs Manager and Head of Sustainability at Invest Europe. I'm delighted to welcome you to the second edition of our AI in Private Markets webinar series, where we focus on practical AI use cases. Today, we will explore real-world AI applications in the context of private equity and venture capital. The webinar will begin with a general introduction covering the impact of AI on a private capital firm's digital journey, how AI is being used across the private equity lifecycle, and case studies demonstrating AI's potential to transform portfolio monitoring, the management of DDQs, and the deal lifecycle. We will also take a look at emerging trends and what the future of AI might hold for 2025. Following the introduction, we will move into a panel discussion where you will hear directly from practitioners about how they leverage AI within their firms to drive innovation, efficiency, and impact while aligning with their business models. Key questions that we will address include: what benefits have they observed and what risks keep them up at night? If they were to start over, what would they do differently? How mature is the broader vendor landscape? And what does it look like? If everyone uses AI similarly, does it erode competitive advantage? What is AI's expected impact on traditional job roles and hiring? All of this and many more questions during the panel discussion in 20 minutes from now. As always, we will have a dedicated Q&A session towards the end of the webinar as well. We invite you to actively engage during the webinar by asking questions and sharing your thoughts in the chat box or in the Q&A box. This is a great chance to interact with our experts and gather insights that can enhance your work and inspire your future initiatives. Before we begin our discussion, I would like to warmly welcome our speakers. We have a lot of ground to cover, so I'll keep it very, very short. Matt Guy, Senior Advisor at Holland Mountain. We're also pleased to be joined by Joshua Lowe, Principal at Collar Capital. Just admitting a few more people. We also have with us today Andrew Morgan, AI Delivery Lead at Apex Partners. And last but certainly not least, Ross Pooley, Senior Associate at Headway Capital Partners. It is an absolute pleasure to have all of you with us today. We truly appreciate your valuable time and expertise. Matt, I'm pleased to hand over to you to get us started.
Hi, Invest Europe. Hope everyone's had a great start to 2025, and thank you for having us participate in this webinar series again. In our last session, we covered AI fundamentals, breaking down the definition of AI into different models and exploring where they may be used within private markets. Today, we're really going to build on this foundational knowledge and explore use cases that we're seeing from our engagement across the market. We will start by looking at Holland Mountain's digital maturity scale, which will allow you to profile where you are with regards to AI relative to your peers. And then we'll start to look at how AI is being used across the PE lifecycle before we deep dive into some case studies showing how AI has the potential to transform portfolio monitoring, management of DDQs, and the deal lifecycle. So let's jump in. This is Holland Mountain's digital maturity scale, and it's used by our clients to see where they're operating relative to their peers and also identify where they want to get to. We updated it last year to include AI, and most of the market are currently sat around emerging and established. So essentially they have AI policies in place and they're using it in some of their processes, but they're not seeing huge gains at this point. We're going to go through some case studies later today, and this will give you an idea of how you can move to optimized and beyond. So first up, we have an overview of use cases. This graphic shows where managers are using AI in the PE lifecycle. The saying an art rather than a science jumps to mind here, as I'm sure there's lots of ways you can interpret and categorize how AI is being used, but hopefully this is a useful representation nevertheless. So starting with a capital raise, AI can provide valuable insights about relationship strengths between individuals in the GP and the LP. It can be used to automate RFP and DDQ responses, and we'll cover this in more detail later. And it can be useful in expediting legal reviews, providing markups on contracts. In the investment period, AI is used to support deal sourcing and initial deal due diligence. And again, we'll cover this in more detail when we look at the case studies, and we'll also be covering this in our panel discussion. One of the big plays for AI is in the monitoring and value creation processes. So on the monitoring side of things, there's a huge amount of time spent collecting, curating, and normalizing data. And AI is a powerful tool that can be used to support and automate these activities. We're starting to see some SaaS vendors offer generative analytics. So effectively, you can build data visuals using natural language. Although personally, I think it's a little bit gimmicky. And a more compelling use case is to use data collected for monitoring along with predictive ML models to forecast better valuations. We'll look at portfolio monitoring use cases shortly anyway. On the value creation side of things, managers can provide portfolio companies access to advice on AI best practice, facilitate knowledge sharing with other portfolio companies, and give access to proprietary AI tools that may give portcos a competitive advantage. When we're thinking about exit, there aren't specific use cases that spring to mind, but in future, managers will need to start to think about how AI will be used on their data in an exit. Now, we've put investor servicing and fund administration across the bottom here, as these functions typically support all stages in the PE lifecycle. On the investor servicing side, CRMs continue to develop their AI features, but feedback on usefulness is mixed. Some managers have seen better results from extracting rich data from within the CRM and using AI to summarize and produce new insights, such as trends in conversations with their LPs, as an example. We've got transcription here, but this could technically fall within any area of this graphic, and the productivity gains from transcription can be great, but it's worth noting the risks with transcription, especially that it creates a record that could misrepresent something and also be reviewed by a regulator. So to wrap this slide up, we've just got fund administration along the bottom, and many of these themes cross over with portfolio monitoring. And in practice, we see both fund administration and portfolio monitoring teams using common tooling to address common problems. So let's look at a more detailed example that focuses on portfolio monitoring. In this example, we're going to focus on the collection and summarization of portfolio data. This typically involves accessing and downloading different documents and extracting data points, as well as writing quarterly updates covering key events during the quarter. AI can play a pivotal role in this process and automate low-level tasks to a higher degree of accuracy. And this is great because, as well as driving efficiency, it also improves job satisfaction, leaving teams with more time to focus on value-add activities. So let's look at some of the activities that would typically take place in the portfolio monitoring process. So someone in the team would download portco docs from different portals or systems, and they would save these in SharePoint. And often they're saved in obscure folder structures and use unconventional naming. The team would then manually read and review these documents and summarize the changes during the quarter, so the key value drivers. Quite a lot of work goes into manually extracting data points from these Excels and PDFs and uploading them to portfolio monitoring or accounting systems. And then finally, someone will be tasked with writing a quarterly update for the portfolio company. Now, looking at our example that leverages AI tooling, AI can be used to classify the documents, it can extract the data, and LLMs can support in summarizing the qualitative information provided by the portco. The LLM can also be used in the generation of write-ups for quarterly reporting, transforming notes into consistent written analysis. But it's always important to keep a human in the loop. But as you can see from this, there are multiple opportunities to utilize AI within portfolio monitoring. And I think this takes us quite nicely into DQs. So the management of DDQs and RFPs is another great example of a very manual process spanning multiple teams that draw on qualitative data from multiple sources. So let's look at this example. Someone within the IR team will receive a DDQ and RFP, and they will typically split out the questions that they think need to be answered by different teams and send them to, say, the investment team, the finance team, the legal and compliance team as an example. There's usually more as well. And what will happen during this process is they'll receive answers back from these teams, but there'll be an inconsistency in terms of what each team is saying, and also an inconsistency with answers that they provided for DDQs. And this requires a great deal of management and coordination, multiple email chasers. Once the answers are sufficient, there's then quite a lot of copy and pasting into a master document and then formatting before that's then sort of consolidated, potentially a covering letter's written and then is sent out. But with the development of large language models, it's now easy to reference the most recent DDQ or DDQs and automatically tailor the information in that previous DDQ to answer a new DDQ. And this reduces the burden of maintaining a golden source of answers for DDQs, but it can also improve the consistency of output. In effect, AI can get you to a first draft, which your teams can then review and adjust the answers if needed. Really smart AI applications can also learn from the adjustments that the teams will make and improve over time. And that really then takes us on to our last example, which is looking at the deal cycle. So for me, this is possibly one of the most exciting use cases for AI. It's unlikely that AI will completely replace existing processes, but there are tools that can augment each phase. So looking at the first one, during the research phase, as well as traditional information sources, AI can scrape millions of websites on data on potential target portfolio companies. And this can be expanded to cover podcasts and videos as well. Large language models are great at translation, supporting managers that have a global investment strategy. During the initial screening phase, LLMs can be used to score the similarity of a company against an ideal target portfolio company, which is often referred to as a phantom portfolio company. And given the semantic nature of large language models, it may identify opportunities that would ordinarily be missed using a more quantitative-based search criteria or scoring criteria. Now, before reviewing SIMs or other documentation provided by the Portco, there'll usually need to be an NDA in place, and there are AI tools that can support the review and redlining of these documents. And large language models can then be used to summarize the information in the SIM. Obviously, this information some of this information from previous steps needs to go into a CRM. So when adding information into the deal pipeline in the CRM, AI tools can support this, for example, using natural language to update a CRM record. And then moving to box 5, for market research on the target and the competitive landscape, AI can provide alternative results to market data sources and Google. So using Perplexity, for example, and their model might provide different results from the internet than accessing traditional market data or Google search results. And then for both pre and post IC, GenAI can assist with completing IC memo templates, effectively transforming your notes into written prose in a consistent format or template. And then for more detailed financial DD, AI can support the extraction and normalization of data, and this is similar to what we covered during the portfolio monitoring example, but it's also worth noting that there are predictive ML models that can provide insights, and that's sort of a new area that people are looking at when performing financial DD. And then finally, on deal closing, it's just worth noting that there are multiple AI tools that can support the legal review process during deal closing, and that really concludes the deal cycle and where AI can be augmented. And whilst this concludes our examples for today, I'll leave you with our predictions for 2025, as this is a common question we get from clients. But to do this, I think it's important to contextualize the journey that we've been on. So 2023 was really the year where we started to experiment with Gen AI personally, for example, asking ChatGPT to write a birthday message. And if you'd have asked me what 2024 would hold, I would have said that it would be the year of business application. And whilst to an extent this has been true, I think the reality is that it's been more of a year of experimentation. Managers have spent significant time developing use cases, which in itself is really positive, because I don't think managers have spent this amount of time thinking about how technology can benefit them. And on the vendor side of things, we've seen their offering evolve from developing proof of concepts to having well-defined services. We think that 2025 will build on 2024, but there'll be a greater focus on embedding AI with automation within processes, rather than today, where people are accessing AI tools on an ad hoc basis through siloed chat interfaces such as ChatGPT. So what this means is that AI will be embedded within multiple applications that you use and will become integral to workflows. So that just leaves me to thank Invest Europe again for having us cover these AI use cases, and I look forward to the upcoming panel discussion. If anyone has any questions on what I've just covered, please drop them in the chat and we can pick it up as part of the panel. Thank you.
Thank you very much, Matt. And I can see that we already have kind of some questions coming in the chat box, which we will definitely get to. But maybe, before getting there, I think there is one caveat that I wanted to add, which is you've all seen in Matt's presentation that there are some kind of examples of possible tools and providers, that you can use, in different parts of the process. As Invest Europe, as a pan-European association, of course, we always aim to remain neutral and objective. And so we do not express any recommendations, or we do not kind of advise use of one provider over another. So maybe just to add that, but the examples are, as Matt said, very much examples are all very, and very well known and commonly known examples. So I don't think there were any secrets in there, but maybe just to add it, to clarify that. Moving on then to the panel discussion. And Josh, maybe I can start with you, and then we can go around, of course, to Ross and Andrew as well. But how are you using AI? How have you augmented AI into the processes, within your firm, and maybe using this question and also as a basis or as a hook to explain basically the business model of your firm, right? And how that can have, or how that has had an impact on how you use AI.
Sure. Thanks, Erica. So as you said, I'll give a little bit of context on the firm, which will help frame the approach that we're taking. I'll tell a little bit about myself and the team, and then how we're using AI. So I work for Coller Capital. We're a secondary specialist. We invest in both credit and equity, GP-leds and LP-leds being the transaction types. And if we're to simplify the business for the purpose of this webinar and the subject, we raise capital, invest capital, monitor it, and then ultimately distribute the returns. When it comes to the team, now we have a strong investment team, which is full of investment bankers, MBA graduates, but we also have a core data science team in the investment team, which is where I come in. So I head up the data science team in the investment team, and we look to use a variety of statistical techniques to more advanced AI techniques. A little bit more on that shortly. So when it comes to AI and using it, now we look at it from two perspectives. You could look at it from the individual or the more strategic direction of the firm. I think when it comes to the individual, and this is myself speaking personally, now I use a number of the tools that Matt just went over, and I use them daily. I use ChatGPT daily now. I mainly use it actually as a personal tutor. So when I have questions about the domain, about some acronym I've just heard, I'm straight on there. I'm asking it, I'm getting it to explain concepts to myself. So I come from a technical background. So I've got a decade of applying machine learning. So I don't come from a finance background, but I can use ChatGPT to help explain some of the finance and investing terms. So a fantastic tool in that case. When it comes to the more strategic direction, so Collar, the firm, before I joined 4.5 years ago, we were using various statistical techniques and machine learning and AI. It all started 12, 13 years ago. They were using simple Monte Carlo simulations in the investment team. However, really, it's advanced with the tools that have become available to us, the open source nature of machine learning and AI, which has really accelerated the ability of data scientists to use these tools. And really, it comes back to, as a firm, we have an enormous amount of data in any transaction. So we're given loads of unstructured data in PDF reports, and we're also given a number of structured data points. So when I say structured, I mean someone's formatted it and put it in a table. Now, we use heavily a branch of AI called machine learning. Now, this is grounded in the idea of machines being able to learn patterns in data. So you have data and then an outcome, and there's some patterns which link the two. When it comes to large language models, you see text, but underneath it is also numbers. Now, if we can learn these patterns, we can take these patterns models and apply them in new situations where we see data to make predictions. And this is ultimately what we're trying to do as investors. We're trying to predict future returns to us as secondary investors. I'll pause there and I'll hand it back to Erica, but happy to go into any of the points further.
Thanks, Joshua. Ross, you want to go next?
Yeah, no, certainly can. So Ross Pooley. So as Eric mentioned, I'm a senior associate at Headway. And what Headway does, again, just for the context of how we go about using AI or are continuing to implement AI, is we back private equity managers on a deal-by-deal basis with a sort of primary focus on the independent sponsor model. So those quite experienced private equity managers who might have a long tenure at larger organizations who are electing to begin their own firms, start their own shops, but who feel building a track record on a deal-by-deal basis can sometimes be more prudent than trying to raise a blind pool fund out of the gate. So with that context, how we use AI is very heavily on the due diligence side. So these managers will bring deals to us, oftentimes with a vast amount of due diligence completed to date, and they're trying to raise the funds for that specific deal. So we'll oftentimes be dumped, for lack of a better phrase, with lots of data that will take quite a while to sift through, hundreds of pages of DD reports, financial, commercial, legal, so on. And it's quite important for us, at least as Headway, we try to work quite efficiently with our managers. We feel it's not prudent to waste time or drag things out. So for that reason, we need to get up to speed on completely new sectors very quickly and understand where our GP managers are coming from. So Matt sort of alluded to it with how he described the deal cycle. We come in once there is we come in once there is a large data room. We'll have to go through that historically quite manually. And now with AI, we tend to be able to go through that a lot quicker, and we're able to do it in a much more thorough manner. So on the due diligence side, it's invaluable. and it enables us to create more detailed conversations with our investment committee, and we're able to, I suppose, kick the tires better than we've historically been able to, or at least more efficiently than we've historically been able to. Throughout the deal cycle, we move to sort of legal documentation review. That's a huge element for us as well. We get LPAs that are oftentimes hundreds of pages long, and of course, we're not lawyers, so I won't ever claim to have the technical expertise of a lawyer, but we do like to get quite in the weeds. So that helps us get up to speed with key commercial elements, again, faster and more efficiently and more thoroughly than we'd otherwise be able to, making it a bit more value add as we go through. And then, as Matt mentioned, we also use it for rote tasks. ChatGPT, Gemini, also daily use items for us. So that's more the general side, not necessarily on the deal side. And I'm only speaking from the investment team side, but that's where I sit. But I know across the firm, we also use it for things like responding to investor questions. Of course, it's not completely hands-off, but it helps us come up with more thorough answers more quickly that we can review and provide detail to our investors if and when they ask. So that's largely how we use it today. I think there's a lot more for us to go after, but early innings.
Thanks, Ross. Andrew?
Hello, everyone. My name's Andrew. I'm the AI delivery lead at Apex. So my role is all about driving pilots and testing AI tools across the firm, although with an investment team focus, and take them through to production and provide some strategy around that. So Apex Partners is a UK headquartered, a 50-year-old private equity firm. We have aggregate commitments of almost 80 billion. We focus on our main sectors being tech, services, and internet or consumer. So we really have, a fairly tech-focused firm, and everyone's very excited about the use of AI in their daily work. In terms of my background, I actually come from an insurance sector, which has always been a statistical, actuarial-driven industry. You could say it's probably the first stats-driven industry that there was. And of course, when AI started gaining momentum in financial services, probably the early 2010s, that's when I followed that through into the consulting world, and then working for a software enterprise AI software vendor. So I've seen a progression of this from different perspectives over the last decade. So what we're doing at Apex, and I think there's a lot already been mentioned. Matt and Ross have mentioned a lot of the use cases that we're looking at as well. We could probably boil this down to a fundamental overarching use cases being enterprise search. So this is where Gen AI is really sort of focused. So we all have tons of unstructured data, documentation in our SharePoints. Likely it's pretty messy because it goes back a few decades, and it can be quite difficult to find the document you want, to find the insight that you need, and a lot of firms don't know what they have, or if what they have is valuable. It's just difficult to get that out. So enterprise search is a big topic for us to consume all of that data and to use it. But underneath that umbrella, there could be lots of sub-use cases. So be it document specific. So I want to look at all SIMs across my history, or expert calls, whether I'm in a due diligence process and I want all that data more easily consumed and summarized, or whether I'm looking at all historical deals to find precedents or to find insights. And of course, then blending in other data sources, whether it's structured data sources that we have internally or external data sets that we have a license to, bringing that all together to have a sort of focused answer to a question that we have. Show me everything I have on company XYZ or this industry. Show me insights and give it to me in a digestible way. That's the overarching theme. We're in the buy camp, so we're buying in tools. So we're using obviously ChatGPT as a general purpose type of tool. So there's lots of ad hoc things that people will do with that. Throw a legal document into it and explain to me in normal language what it means, and all that kind of. There are dozens of those types of use cases. We're really seeing a massive benefit there in terms of time saved. And then we have more focused, private equity focused and use case specific tooling as well. So whether it's the enterprise search idea or more workflow specific things, so like a DDQ manager or a expert call, summarization and aggregation. So we're looking at a few different tools. We are still piloting a lot of the specific tools, testing them out. That's pretty much where we are. We also want to get to a space where we have more structured data, so we can do more of the predictive analytics or machine learning on that. And Gen AI will help us get there. We can start fishing out that data from our unstructured documents and whatnot, and building a structured database that we can then solve other use cases. For example, tell us what factors and features in all our historical data could have a correlation to very successful deals or very unsuccessful deals. That could be an interesting one. I'm not sure if it will be possible. We're in the early stages of that, but just one of many examples of what we're trying. Thank you.
Thanks, Andrew. Actually, I mean, because some of you have actually mentioned, if not all of you have mentioned the use of ChatGPT, right? And I think very early in the webinar, we got this question that came in the chat box. How can sensitive business data remain confidential while using AI tools such as ChatGPT? So maybe we can address this one now. Any views from anyone on this?
I'm happy to go first because we get this question quite a lot, and then happy for anyone to top up as well on anything I might have missed. But I think the first thing that you can do is obviously anonymize data. So if you've got sensitive data, whether that's sensitive personal data or sensitive business data, you can look to anonymize it before uploading it to a platform. There's then a couple of other routes that you can take. So you can have an enterprise account with these providers where they won't train their model on your data. Again, there's a few things to look at here in terms of where your data is going to be stored, how long it's stored for, making sure that you're transparent about that in your comms with suppliers and investors, etc. And then finally, you could look to host a large language model yourself, which would probably be the most secure solution. But there are your different options there. But just as to give, I guess, smaller to mid-sized P firms an idea, within ChatGPT, there's a Teams account, and within that, it explicitly won't use your data to train its models. So that just gives you a very high level overview of sort of information security around ChatGPT, but it's quite a deep subject and lots of different sort of regulations to consider, but that's quite a quick and pointed answer on that one.
Thanks, Matt. Josh, Andrew, Ross, anything you'd like to add? Andrew, please.
Yeah, I'll just add, obviously, if you're dealing directly with OpenAI or any LLM provider, you have a contract with them, so you can make sure that your data is segregated with them. If you're working through a third provider, which is using the underlying LLM, it'll be through their contract and their API, which they should have the same contract in place, and you have a contract in place with the third-party tool. And usually it's the same story. They segregate the data. Sometimes then they locally host models. So for example, one of our providers just hosted DeepSeek, which obviously you don't want to use that directly as a China hosted model, but you can just download that and host it on their infrastructure. I think where the worry comes in, what most people are thinking is that you're actually sending snippets of the document or whatever data through to the LLM to provide a response. This is a vectorized data, so you can't necessarily read it. It's just a line of numbers. And that gets mixed in with other data perhaps and sent back, but if they're working towards their contract, it should be totally segregated.
The DeepSeek point's really good there, Andrew. I think probably worth touching on that as well. So obviously if it's being used locally, then it's fine. But I guess the online version is probably worth sharing with everyone, I guess, some of the implications of using that. So the data that's being collected there is your user data, IP address, keystrokes, your prompts, any documents that you upload into the system, and that can be used by DeepSeek however they want. That data is stored on servers in China. So it's probably, just worth sort of everybody being mindful of that, because obviously DeepSeek's in the news at the minute. It's quite topical. I think a lot of articles are focused on the benefits of it being its relative performance to cost. But yeah, it's a really good point to highlight that one, Andrew.
Thanks. And I can see more questions come in. I'll just maybe take one now. And up to you, up to the panelists to actually, decide, how much information they can share on this, right? But what would you say are the top 3 or not too expensive AI tools that mid-cap private equity funds can or should use? As I said, earlier, as Invest Europe, it's very difficult to give any advice or any recommendations on this. In any case, I don't think we would have the knowledge anyway, right? On all of those AI tools, but any insights, any kind of steer that you can give if you don't feel comfortable sharing any names or any brands or something, maybe just some guidance on how to select, right, the most appropriate tool that suits your needs. But Matt, I can see you are unmuted. Do you want to chip in here?
Yeah, happy to. I think it really depends on what you're trying to do. So a couple of like really sort of well-known tools that we've just spoken about, ChatGPT, Perplexity is another one. They can be great for research, right? So if you're in a P firm and you need to know anything, so it doesn't matter what team you're in, but for example, if you're new in a finance team and want to understand the background to carried interest, you could use Perplexity, and that would probably give you better information than Google would, as an example. So there's some like free tools that people can just experiment with. I wouldn't then necessarily go down the route of saying, this is a really good vendor, they're quite cheap, use them, without understanding what your problems are. What I would say is, and I've seen this links to another question that was in the chat around where's the best place to start a proof of concept. What I would say is work out what's important for your business over the next couple of years. So, for example, are you going to be fundraising? If you're going to be fundraising, being able to answer RFPs and DDQs quickly is going to be important. You're going to be uploading documents you're going to be uploading documents into a data room for investors to look at. You can provide them with the ability there to inspect those using a large language model. So there's AI use cases that are then very tailored to where you are in your journey and your strategy as a PE firm. So I think first work out where you're going as a firm, then work out how AI can support that, and then select the tools off the back of that and put a roadmap together to get there, would be my advice on that.
Thanks, Matt. Any other insights, or shall we move on to the next question?
Yeah, I could say just from an exercise I'm going through now in terms of value that just basic ChatGPT gives versus the cost of a Teams license, which is not very much. It's like $30 per person per month. When you put that in the context of business software, it's not a lot, but the value it's already giving is huge. And that's without even thinking about specifically designed workflows and tools that will give even more value. So that would be a starting place. You wouldn't want to use any free tooling with confidential sensitive data. So if you want to throw in a document, even if it's not that sensitive, you'll want to pay something because they'll make sure that the data and contract in place is set up for that.
Thanks, Andrew. Maybe moving on then to the next question. I will continue to pick up on the questions that arrive in the chat box. Matt, you already very nicely kind of indicated and showed in the introduction and the slides, right, kind of what the current process looks like, and then what the process could look like using AI. But maybe a question then for the panelists, right? From your perspective, what would the process look like, on your side without AI? So how were you operating kind of without AI? So basically a before and an after, and maybe then also explaining kind of the benefits you have seen from them moving to AI, and maybe also then thinking about, okay, what are the risks that you have seen at your experience and maybe keep you up at night, if at all, right? Joshua, I can see you're unmuted. Shall we go with you first?
Sure. I'll give it from an investment perspective. I mean, it's a continuation as well of technology. It's not just AI. 35 years ago, they were just using telephones, right, in secondaries, or so I'm told. So it's different now, right? We've got tools like Excel. We've got various pieces of software that we buy. We've got our own proprietary software and technology and AI investment models that we've built. How it works is we use them complementary. So we still have the traditional team where they do the fundamental equity analysis, and we have our AI investment models. Different situations may require a different approach. We may use it as the first part of the analysis, or we may just use it as a comparison, as a challenge to what the fundamental equity analysis has forecasted. So for now, it means that we don't necessarily do less. We, in fact, often do more analysis and diligence, and it allows us to use all of the data that's sent to us. We can analyze every single company, loan, fund in a transaction. Clearly, it's a continuation and there's lots of tracking and lots of monitoring. And also, as well, our investors, they want more information. They deserve more information. So we have to report better on it. We have to give more accurate, more detailed forecasts of our portfolio as we go as well. So for us, it's allowed us to be more granular, be able to use all of the data in a prospective transaction and be able to better forecast prospective transactions and also our current portfolio of various funds.
Yeah, I'd echo that completely. I guess some people may be under the misguided notion that AI means that you need to do less, therefore you do less, and everyone logs off at 4 or 3 p.m. That's not the case. I think it just creates the space to do more and go further. So everything that Josh said, I echo from our investment team side. We've been able to go deeper and cater to what is becoming sort of a ballooning deal pipeline, I'm sure. But I know with us, I'm sure generally industry wide. So you're able to chew through a lot more opportunity faster. So it certainly isn't everyone's doing less now because AI is doing it for us. In fact, it might be the exact opposite.
Okay. Andrew, anything you would like to add?
No, I think, yeah, they've covered the points pretty well there.
Okay.
In terms of if you wanted to go into risks or sort of challenges of this, I think we're still phasing this in, and we have some core users, and we've just given everyone access to ChatGPT. We're still working on piloting a bunch of tools, and clearly with any big sort of technological change, there's always going to be challenges and difficulties to get this right. I think everyone's still learning. Everyone's still learning to figure out how to get the best out of this, whether it's the software providers or the users and all financial services firms. But the challenge is getting enough of people's time to really invest into testing and figuring this out. Everyone's really busy on deals or even not on deals. And you kind of need the software to be almost production ready to work on live deals. And that's a bit of a challenge because none of the software is 100% there yet. It's still pretty early days. And it's also a total mindset shift. So it might be a bit of a cliche, but there's a change management angle to using these tools. People are not used to using something that has a probabilistic output. Everyone's used to, this is my software, A plus B equals C. If you get a different output every time, then there's this trust issue around, is it telling me something that's true, or is it hallucinating? The reality is that there's different versions of a correct answer, and it's going to present lots of different things to us. And people need to really change the way they interact with software and look at data to get the most out of this. So we're working through all these things, and it'll take time and a bit of change management and training to really get the most out of these tools. But even at this early stage, it's looking very positive. As a firm, we're pretty tech positive. There are not that many skeptics. I'll just add that on challenges, but otherwise, I think these are all surmountable.
Thanks, everyone. There's one question that has come in the chat box, which is, what is the most useful, mind-blowing use case that you have seen or experienced in real life? Matt, can I give this one to you first, maybe? Given, I guess, you bring a broader perspective, right? I think, from where you're sitting and the many clients that you are working with. And of course, Josh, Andrew, Ross, feel free to chip in. But maybe, Matt, we can start with you.
Yeah, certainly. Tough question. AI is not a silver bullet, I would say, is the first thing. But I think, so there was a moment, probably trying to think back now, maybe like 5 or 6 years ago. So this was before large language models, but I implemented some AI tooling at a previous PE firm that I used to work for. And that would essentially take data points out of unstructured documents across the investment portfolio. And the investment portfolio was large. It was like hundreds of investments. So we were probably processing on like an annual basis thousands, if not tens of thousands of documents and manually extracting data from those. We implemented a piece of tooling which took, I think, around 2 to 3 months to implement fully. And then pretty much 80% of that workload was automated overnight to a very high degree level of accuracy. And through our sort of testing approach, we found that the machine was actually more accurate than humans were. So that was a bit of a mind-blowing moment for me in my career, and I guess what triggered my interest in AI at that point. I think one of the most recent sort of developments with AI that interests me the most is using large language models to scrape vast amounts of data across the web. So it's on the deal cycle piece that I spoke about, but also scrape videos and podcasts and be able to find insights that were traditionally locked up in forms of media and mediums that you couldn't access. So I think previously it was the first example that I've given, but more recently it's using large language models to be able to effectively profile millions of companies across the internet using public data. I think that's a real exciting opportunity that private markets will take advantage of over the next few years or so.
Thanks, Matt. Maybe a question, Ross, for you, right? I think you were saying earlier, well, with AI, the idea is not necessarily to do less, right? You can actually do more within the same period of time. Maybe a concern that people may have is, how will AI have an impact, or what is the expected impact of AI on traditional job roles and hiring? Is this something people should be very worried about, or do you think it's we're not quite there yet? I'm guessing it's the latter, but I'm interested in hearing your views on this.
Yeah, I think there was the early sort of threat that low-level jobs that do rote tasks will, just be washed away with the tide of AI. I don't think we're there yet. I don't know if we'll ever get there, but I think the nature of job roles is they'll just evolve. I also, I can't say I was around when Microsoft Excel started permeating the financial services industry in the 80s, but the role of analyzing financial statements and forecasting models and predicting returns, that idea hasn't changed. Just how the job role goes about doing that is what changes. So I think it won't change the levels or roles, I guess, as you traditionally know them, from a sense of wiping them out completely. In my view, I think the criteria by which firms begin rating or judging new potential candidates will change. So one candidate's ability to utilize AI in a much more efficient way and get to a higher quality result than another candidate will be naturally more valuable, in the same way that just prior to AI in a private equity firm, if one candidate can go about financial modeling in a much more efficient way and get better outcomes, they will stand apart from other candidates as well. So it's more just, from my view, how well people can utilize the tools at their disposal, rather than worrying about whether their job will exist or not. The people who will, continue to, I guess, succeed in their careers are those that will adopt the tools most seamlessly and most efficiently. And those that refuse to or struggle to use new tools will find themselves dropping back in competitiveness. Of course, just my view, I could be completely wrong, but that's the sense I get from how people are adopting AI.
Josh, you want to chip in?
Yeah, may I add to that? I'll give
Sure.
it from a slightly different perspective, and it's from a data science perspective, so a purely technical perspective. And to answer the former question as well, the most mind-blowing use case I've seen is actually writing computer code. 7, 8, 9 years ago, I'd have never been able to predict there'll be a tool today that can write computer code with such technical excellence. And it's here. And every iteration of a large language model, it gets better and better. And you can also use it as a tutor to help you construct it together. And there's tools out there now which will do all of the constructing of the different pieces of code as well. So therefore, when we look at the role of a data scientist, software engineer, someone writing computer code, it's definitely going to change. It's more valuable to have the applied knowledge of how to apply it to get the value of what you're trying to do. In an investment capacity, it could be what you're trying to predict, how you're going to then action that forecast, as opposed to sometimes the underlying technical skills where 10 years ago, if you could write excellent computer code, there was few people that could do it. And I think we're already seeing that big tech and tech companies can do a much more productive with smaller teams of software engineers who are the specialists. There's not necessarily as need to have bloated large software engineering teams now. And it's a continued journey. Does it mean that we have less software engineer jobs, or does it mean that there's just more software engineers who can produce more and there's more software out there globally? TBC.
Thanks both. Before going back to the chats, Andrew, maybe a question for you, because clearly, right, people are interested in kind of the tools that are out there, the different providers. If you look back kind of to the last, year or two, right, how do you think things have changed? What does the broader vendor landscape look like, including in terms of maturity? I know you've kind of covered a bit of that already, but anything, you'd like to add in response to kind of people's thoughts and questions?
Yeah, sure. Yeah, and it changes by the day, right? DeepSeek came out and suddenly they changed the game a little bit as well. But in terms of obviously the LLM providers, they had a pretty high barrier to entry up until what we've learned this week. And we had a handful of them and a bit of reliance on especially OpenAI, and then everyone has their favorites as well. You might want to use Claude or whatever. There's that layer, and then you have the third parties that are using this to create their own software offerings, and that has just boomed right in the last year. I get approached every week with a handful of new startups I haven't heard of, and maybe not always PE focused, but quite a few PE and financial service focused. The barrier to entry to create an LLM wrapper piece of software is very low. It's very easy to build these things, and obviously you can use them to code as well, so you can iterate and build them pretty quickly. And none of them are really enterprise ready yet, but they're getting close. They're all trying to find their niche. Their value and their positioning will all depend on how smart they are with the kind of workflow it fits in, how good the UI is, how easy it is to use, and what is on top of just being a chat engine, because that's already there. You don't need another chat engine. But yeah, it's in the PE world, there's lots of offerings coming out, and some are more general purpose, like I've touched on before, the more kind of enterprise search. Some are more specific to a workflow. We're looking at both of them to see what might work better. Naturally, when you bring these in, you become a bit of a build partner. That's where they are at the moment. So you at least you can drive some of their development towards what you want, which I think is a great advantage as well. But yeah, I think over the next year or two, it's going to be very interesting to see where this goes. I mean, it's natural that a lot of them might not last, or they get bought out or consumed into larger players. It'll be very interesting which ones stick around, and the vendor selection process can be pretty tricky because of that. I mean, often it's not about assessing the software itself, because that moves so quickly. It's assessing the people, how fast they're growing, how many clients they're bringing on, their focus on the industry and on specific use cases. And also, data security is a strong criteria. How seriously do they take that? So the vendor selection of the old days, if anyone used to do those, used to be a very drawn out process, and you go through all these due diligence documents and everything. You can't really do that in this world. You've got to assess it quickly, and you've got to have a different way of assessing these companies. But so far I think we've done it right, and piloting seems to be going in the right direction. But you never know, so you might want to spread your bets on this a little bit. The other learning from this is a lot of them demo very well, unsurprisingly. In a canned demo, they look amazing. When it comes to reality of rolling something out, there's a lot of limitations and difficulties, and that's not necessarily the vendor-driven limitation. It might be a limitation of the LLMs they're using, the APIs that are available, the cost of things, which again, that's probably going to change quite rapidly now. So you got to keep a bit of an open mind, and nothing's going to be perfect. And sometimes when you roll these things out, it's 2 steps forward, 1 step back, as everyone's learning how to properly implement these things.
Thanks, Andrew. Conscious of time, do let me know, all of the panelists, if there are any questions in the chat that you'd like to take on at this stage. If not, I'll just throw another one at you. Matt, you unmuted yourself.
Yeah, I was just going to top up on Andrew's point, which I think was very, very well made. I think the only thing that I've noticed as well over the last sort of course of 2024 is that vendors have become much more targeted on the use cases that they're trying to address. So at the start of the year, I think they were sort of almost fact finding with business partners during build partnerships to try and work out how they could solve for certain use cases. I think towards the end of the year and certainly moving into 2025, that's becoming much more workflow driven. So people are thinking, okay, so in the day-to-day life of the user, how will they interact with the system and how will they want to address a certain task? And therefore usability is becoming much better. It's not necessarily just interacting with a chat interface anymore. It's becoming augmented into various different systems at different stages where it makes sense. And sometimes prompts are just running in the background without people having to write them. And I think that's going to be quite a big shift that we'll see over the course of the year, is that it becomes more augmented into workflows that people are already doing.
Thanks. We have 4 minutes left, and I usually like to kind of end the webinar asking all of the panelists and all of the speakers for some kind of practical takeaways, right? So maybe we can use as a hook kind of, okay, if you were to start again, is there anything that you would do differently? So are there any kind of quick wins or tips and tricks that you would like to share with members before we close the webinar? Ross, shall I start with you?
Sure, yeah. I don't know if you probably have to ask me again in 5 years what I would do if I started again, because I think I consider myself still in the process of starting. As a quick win, or at least some key learning I've had early on, is, well, if you're not necessarily on the sort of technical, technology side of things, you're quite busy doing your everyday job function. So AI is nice to have on the side that helps you do that. What I learned is the more time you can carve out and put into working with AI, the more you'll get out of it. And obviously, I don't think that's a particularly earth-shattering view. But anytime I've had an excess, capacity in my day, I can have a play around with an AI tool and use it in a different way I haven't used before, just to see, if it will solve this small task that I work on frequently. So I would say if you can carve the time, the more you put in, the more you get out. But hopefully people are doing that already.
Thanks. Josh?
Yeah, my point would be, if you're going to do something strategic, spend a lot of money, make sure you've got complete clarity on why you're doing it. Is it productivity gain? Is it performance? And just be laser focused, because potentially AI technology is not the solution. But if it is, make sure you're laser focused on why, and don't get fooled by a good pitch deck from one of these new 2-month-old companies, because there was probably going to be a fair few of them that aren't around in 2 years' time. And there'll be some winners. There'll be some phenomenal companies as well.
Thanks. Andrew?
Yeah, I guess in terms of tips, and again, also we're still learning as we go through this process, but at the moment, the way I'm thinking about it is that there's a lot of hype, and I see there was a question around where do we think we are in the hype cycle, and about some skepticism. We've been at the peak of this hype cycle for quite a while now, I think, a good few years. But at the end of the day, this is a software implementation, and some of the traditional ways of going about software implementation still hold true. So what is the problem you're solving? What is the process? It's just because there's AI in it doesn't mean that all those things go out the window. You still need some clarity around what you're actually trying to solve here. And if there's value, does it actually solve time, or does it broaden your, the data that you look at? So I think some of those traditional kind of business analysis type of things are still useful here. You just kind of need to speed it up quite a bit. And other tips, there'll always be the skeptics. I'm quite lucky here that there aren't that many, but 10 years ago, I was trying to convince actuaries to use AI, and there was a lot of skepticism. And I think now they're, in my opinion, going through a bit of an identity crisis as a profession. I think the tip here is just to make sure that everyone has an open mind to these things. Nothing's going to work perfectly at the start, and it takes work to get right, changing mindsets. But I think just to make sure that no one's an expert, even though LinkedIn is full of them. No one's really taken a fully fledged Gen AI solution right through to an enterprise rollout. I don't believe to something that like works perfectly every time. It's getting there, and we will see that in the next year. But everyone's on that journey.
Thanks, Andrew. And thanks everyone, actually, our speakers, as well as all the members who have joined today's webinar, and for actively participating with all of your questions and your comments. I realize we haven't covered all of them, so we'll see what we can do kind of to get you an answer to all of those questions as well. Your engagement has clearly made this session, this webinar, all the more enriching. So during the second leg of our AI in Private Markets webinar, we've covered some real-world AI applications, offering a deeper understanding of how AI can drive innovation, efficiency, and impact within the private equity and venture capital landscape. I'd like to extend my and Invest Europe's heartfelt thanks to our guest speakers, Matt, Ross, Josh, Andrew. Your insights have been invaluable, and we deeply appreciate your contributions. As we wrap up today's webinar, we encourage you all to continue the conversation and to stay connected with us and the broader private equity and venture capital community. There's many ways in which you can do that. Follow us on social media, sign up for our weekly newsletter, and visit our website for updates on future events and additional resources. So we look forward to seeing you again soon at one of our upcoming webinars. Until then, thank you once again for your time, and I wish you a wonderful evening. Thanks, everyone.
Thank you.